Is this the year that Binance flips Ethereum? Will anybody flip Ethereum as the number 2 cryptocurrency in the world? Well, today we look at what's coming up for Ethereum. And more importantly, we look at not just one, but 2 viable threats to Ethereum at holding that number 2 market cap spot. This one might not be exactly what you expect. You're definitely going to want to watch this one front to back to get a sense of what's coming for Ethereum as it pushes to all-time highs. The question is this an overextended rally based on Coinbase hype, or is this the beginning of Ethereum taking off for what feels like the first time this bull run? Go ahead, if you guys are excited for this one, destroy that like button. And remember, as always, each and every comment on this video is entered to win your very own hardware wallet. With that said, let's dive in. So Ethereum might look like it's at some pretty high prices, but the reality is that compared to the Bitcoin chart, it almost appears as though its run hasn't even really begun. Check this out. This is the Bitcoin chart. This is the normal chart for Ethereum over the same period. If you're just looking at the US dollar prices, it looks like Ethereum is in full breakout mode. But if we compare this to the Bitcoin chart, well, it really hasn't even come close to where it was back in 2018 as far as its valuation against the Satoshi. So is this Ethereum chart going to start breaking out in a later part of this bull run? That is the big question. To answer that, we need to understand if Ethereum is going to possess the same luster that it did back in 2018. And coming into a huge Berlin upgrade or hard fork, what we know is that Ethereum has several huge adjustments on the horizon. And the big question is, will it be enough to match the excitement around Binance, Smart Chain, or the other L1 competitors? We're going to get to that answer right now. However, as Ethereum challenges for that number 2 spot on CoinMarketCap, it's important to realize that there's a new competitor, Coinbase, and its tokenized version of its stock, which is trading on FTX, its tokenized Coinbase security, is actually going to be here on the market caps. And I don't know whether it's going to start displaying its circulating supply versus, of course, its total supply of 250 million, which at $250 brings this to $100 billion in total market cap. That's a fully diluted valuation. And of course, now that it's trading at, about 50% or 40% above that initial valuation, that means that this is trading in the hundreds of billions of dollars. And if we look at Ethereum, what we see is that Ethereum is at $281 billion. So a single double up from Coinbase as far as its market cap would essentially displace Ethereum as the number 2 token on the market. Now, I know that's a little bit unfair because the reality is Coinbase is a stock and that's a tokenized version of it, but I just thought I'd point out here that actually the flippening might come from Coinbase, not from Binance. But that said, what Binance has been able to achieve and its growth over the last few months has been staggering, and they still have a ton more in the tank as Binance is becoming the de facto L1 alternative to Ethereum, where layer 2s have certainly not been as promising at filling the gap as these particular L1 alternatives. So the big question is, can Ethereum rev up enough excitement to keep people nestled in the Ethereum ecosystem, or will these other L1s take the cake? Well, let's go ahead and look at what Berlin, this new upgrade to Ethereum, actually provides to the ecosystem, and then I'll give you my opinion on what's going to happen as a result of all this at the end of the video. So let's look at this Berlin upgrade, which depending on when you see this video is either about to go live or has just gone live. And this includes several EIPs or Ethereum improvement proposals. Now, the main challenges here are tackling the gas issues that have plagued Ethereum. So let's look at these EIPs. Again, I want to note that this is not EIP 1559, the one that everyone's been talking about to actually solve some of these gas issues by setting a base gas fee and having some of the transactions go to the network to actually burn Ethereum, making it deflationary. It's a huge upgrade that everyone's super excited for. But let's look at what's here on the Berlin upgrade before we start talking about the July upgrade, which is called London. So the Berlin upgrade, which we're about to experience or might have just experienced depending on when you see this video, is going to have EIP 2565, EIP 2718, EIP 2929, and EIP 2930. This one is addressing gas costs. The mod EXP gas cost proposal is repricing a previous EIP, EIP 198, which originally introduced a precompile for modular exponentation. And EIP 198 is a function in particular for modular exponentiation, which introduces a wide variety of cryptographic algorithms to allow RSA signature verification. EIP 2565 is lowering the gas cost cost of the proposal to bring them in line with the cost of executing other operations. Just a little upgrade here, again, addressing gas costs. You also have 2718, which is typed transaction envelope. And this proposal introduces a new transaction type that is an envelope to enable easier support for multiple transaction types. They also have this random proposal, which is 2929, which actually increases the gas cost for certain operations. The rationale for raising these gas costs is mitigating the largest remaining DOS attack vector in Ethereum, so just making the network more secure. And then finally, we have the operational access list 2930. The point is that this is a bunch of little upgrades that are intending to save gas efficiencies around the Ethereum network, or in one case, increase the cost of attacking the network. But the big question here about Berlin is this really going to solve any of the big existential issues around Ethereum? Well, the reality is that it's not. It's most certainly going to improve the experience of Ethereum, but what's happening with Ethereum that's more interesting is actually the evolution of something called Flashbots. Now, Flashbots is a brand new technology created by a research and development group, and while I'm not going to explain every single piece of this technology, I've been researching it for some time. As you guys well know, I'm very fixated on the miner extractable value part of the industry for Ethereum because it's become huge business to extract miner revenue, and there have been some interesting projects that have come up, such as ArcherDAO, Rook, and there's a few more coming to market soon. But the thing about Flashbots is what it actually allows for people to do is be more profitable with zero fee transactions. Now, to understand how this works, you need to understand how these arbitrage bots that are largely clogging the network on Ethereum are creating so much congestion and how this works. Right now, there are a ton of bots clogging Ethereum trying to extract revenue from average users through something called arbitrage. And a lot of this happens on Uniswap. As you can see, Uniswap here is 47% of the arbitrage on Ethereum, but you can see there are other apps here such as SushiSwap and Balancer, DYDX, and some others. But as you can see, Uniswap and SushiSwap make up almost 75% of the volume of these transactions. Now, what happens is if there's someone to exploit in the mempool is where your transactions go before they become transactions. And essentially it gives the big brains or the people using bots the ability to see what people are trying to do on the network and then to front run them. Now, normally what happens with Ethereum transaction fees is they go to the highest bidder. So there are bots that are PGA bots, meaning priority gas auction bots, meaning essentially that they try to pay more in transaction fees than the current transaction so that their transaction goes first. And if they see someone that they can buy at a lower price from and sell to at a higher price, whatever the arbitrage opportunity that they see, the idea is to put more gas on their transaction to get it written to the blockchain first so that they can take advantage of some of these transactions. Now, this particular method leads to something called a gas war, where if there are two different parties trying to exploit the same transaction, then they actually are competing for each other, bidding up the gas more and more and more until essentially all of the profits from that arbitrage opportunity have been eaten up. And there's really no meat left on the bone. So there's got to be a better way besides just bidding against each other to actually get this extractable value out. And this is where Flashbots has come in, and essentially what they're claiming is that they've been able to extract $380 million of MEV since January 1, and that $52.1 million have been extracted in the last 30 days, which means what they're doing is actually trying to create zero gas transactions on Ethereum. And they're trying to avoid these gas wars. In fact, it's being reported that up to 58% of the hash rate or more is now running off of Flashbots. Now, to explain this simply, Flashbots created an Ethereum node for miners that not only watches the mempool like any other node, but also connects to a relay or a server operated by Flashbots. This MEV relay is a kind of parallel channel that directly connects miners to bots that want their transaction included. So essentially what they have is another system to slot in transactions from the actual miners themselves to allow them to take advantage of these opportunities without running up the gas wars. This lack of a gas war is super good for average users like you and me who just want to get our transactions through on Ethereum. And the results have been staggering, showing that the percent of actual blocks containing zero gas fee transactions is going parabolic. This means that miners are able to literally extract all their arbitrage opportunities from the average users on the platform on Ethereum without running up the gas costs. And this is what's leading people to believe that Ethereum's gas fees could be on a lasting downtrend. And if we know that Ethereum's gas fees are going to be on a lasting downtrend, well, that would mean that the usability and the congestion on the network would start to be phenomenal for the average average users that just want to send transactions and buy stuff on Uniswap. So what does it all mean, and how does this benefit you? And the big question is Ethereum going to keep its crown as the number 2 blockchain and the king of all smart contracts platforms? Well, Berlin offers some important updates that will reduce gas costs as we work our way up to Ethereum Improvement Proposal 1559. It's undeniable that this is good stuff, especially as Ethereum's now made new all-time highs on the back of the Coinbase listing, on the back of this new upgrade that it's about to implement. However, this Flashbots news is honestly the most exciting thing, because if the miner extractable value is able to be gotten with zero fee transactions, then essentially the entire Ethereum network becomes incredibly usable with way less congestion. Meanwhile, those who would want to take advantage of all the opportunities in the mempool can still do it. So you have a situation where you can really have your cake and eat it too. But the big question is this enough to overcome the likes of Binance, the likes of Polkadot, the likes of Cardano, or maybe even Polygon? The reality is that this is probably not enough, because if enough retail users flood into the networks, the amount of congestion would still reach new highs. And that's because there's just simply not that many people using crypto yet. And if we were to have a mainstream adoption with hundreds of millions or billions of people, Ethereum would once again grind to a halt. So the reality is that an upgrade to Ethereum is inevitably necessary. And in the near term, the most viable competitor is without a doubt Binance Smart Chain. We do not have active ZK rollup chains yet. Optimism's been delayed. We don't really have a viable layer 2 on Ethereum. And that leaves other layer 1s to fill the gap as relief valves, or maybe even just start developing permanent homes. Here's what I think is going to happen. Ethereum's going to continue to work its way up. Extremely high value transactions and assets will remain on Ethereum, and it will most likely remain the place for the most valuable DeFi transactions. You know, those big money bags that are deploying literally billions of dollars, they're probably going to stay on Ethereum for the most part. But then you look at Binance Smart Chain, you look at how user-friendly it's been, you look at how well it's done at attracting developers and excitement, and it's hard to imagine that that won't continue to grow, especially as the entire chain is far more scalable, far more usable than Ethereum. I do believe that Binance Smart Chain will continue to thrive tremendously over the coming weeks and months and even years. And the exact same can be said of both Cardano and Polkadot. All of these chains are currently necessary, and none of them are unnecessary. The reality is that there's no perfect solution, and that as we push forward through this particular chasm of blockchain adoption, what we need is as many viable options as possible to offload computing resources, so that as Binance Smart Chain potentially gets higher fees, we see people offload into Polkadot and Cardano, and of course Polygon as well. Phantom could be a great option for those who are looking for more Ethereum spillover. The reality is that eventually it hopefully won't matter where you build your dApp or where you store your assets, because all of these blockchains will be interoperable. And for that reason, it really feels like Ethereum is going to hang on to its crown, even if it's ever so slight. But meanwhile, there's a serious narrative building around Cardano, building around Binance Smart Chain, building around Polkadot, and those should not be ignored. All of these assets are set to do incredibly, as the true big cap, large cap alt season has not gone as parabolic as it had in 2017. And I do believe that the last few legs of this bull run will see Ethereum break out against Bitcoin. We'll see these other chains like Cardano and Polkadot start to go absolutely parabolic. That Polkadot parachains, as they start to come to life, will be an incredibly positive addition for the community. All of it is coming and more. There is a huge reason to be holding all of these top chains, and that as a fan of the blockchain industry and crypto itself, each one of these assets is an important piece of the fabric that is making up our modern crypto economy. So it's definitely a smart thing to be holding Ethereum and each and every one of these layer 1s that has potential to disrupt it. Well, I hope you guys enjoyed this one. I hope you guys enjoyed learning about Berlin, about, of course, Coinbase's first day of performance. Although it did dump a little bit on listing, the reality is that it is sitting above $100 billion in total valuation. And the reaction from Wall Street has been utter shock and disbelief that Coinbase is not only the biggest bank in the world, but the biggest financial exchange in the world by market cap. And that means that once again, crypto is doing to these old legacy institutions what internet tech companies did to brick and mortar retail back in the early 2000s, when companies like Amazon and their valuations absolutely left people jaw-dropped. Well, we know how that story ended. And I believe that what you're seeing with crypto is yet another installation into this story. So make sure that you're paying attention to these mainstream crossovers, because it seems at this point all but undeniable that crypto-based innovation is the future of our economy. Thank you, everybody. I hope you guys enjoyed this one. If you did, make sure you smash that like button, leave a comment in the comment section below. If you like content like this, make sure you subscribe and hit that little bell notification. That way you're made aware of all my videos. As always, my name's Elio Trades. I thank you so much for watching. You can find me on Telegram or Twitter. The links for both of those are in the description, and I'll see you very soon on the next episode.